In this presentation, we will continue on with our comprehensive problem related to a hospital. We have the information on the left-hand side. We've been entering that information into the blue area on the right side. In prior presentations, we've been entering the transactions for the time period into the general journal. Then we've been posting those to the trial balance worksheet. We then have the ending trial balance worksheet. This is going to be the ending product for the trial balance worksheet. Now we're going to take these numbers and do the closing entry process. To do that, we're going to create a new trial balance worksheet. That's going to be down below. So here's the ending trial balance. We're going to scroll down and we're going to go to the closing entry trial balance worksheet, which will be down below. These numbers in the beginning balance are going to be taken from the ending balance worksheet in the trial balance. So here's the ending trial balance we had before. In other words, those ending numbers now being the beginning numbers here in our closing trial balance worksheet. This allows us to do the closing trial balance and then close out our temporary accounts to the net position, and also allows us to see two trial balances, one the adjusted trial balance, one the post-closing trial balance. It also allows us to post these closing entries into a nice clean worksheet so we can see exactly what happens within the closing entry process itself. Our objective here, as it is for a for-profit type organization, is to take these temporary accounts, those below what would be the equity section in a for-profit organization, those below the net position, or the net assets section in the case of our hospital here. We're going to close out the temporary accounts to the net asset account. So the ending balance, what we expect to happen at the end of this process is for all of these accounts with numbers in them to be zero, closing them all down to zero, closing them out to the net assets section, and that will result in our post-closing trial balance only having the balance sheet items and no temporary accounts, all of them being zeros. So to do that, we're just going to go straight through this, and we're going to pick up everything that is in a temporary account, the dark blue, the kind of income statement type of accounts. We're going to make them go to zero. We're going to do whatever we need to do in order to make them zero. So the patient service revenue, here's the credit. We're going to do the opposite thing to it to make it go down to zero. So let's go ahead and start to build our journal entry. So we're going to say that the first account is going to be equal to the patient service revenue, and it has a credit on this side. Therefore here we're going to debit it. Now I'm going to flip the sign by saying negative of, and then scroll over to that 1,415,400 and enter. So there is that. Now we're gonna do the same process all the way down. Here's revenues, other. It has a credit in it, so we're gonna debit it. We are in cell K33. We're gonna say equals. Scroll down to the revenues, other. We want to be on the debit side. So the debit side, we're gonna take that account and flip the sign. So we're gonna say negative of this number and enter. There we have that, and then we're just going to keep going down here. We got the revenues and the grants. It's also got a credit. Therefore, we will debit it to make it go down to zero. We're going to say equals the revenues and grants, and that's going to be negative of the 355,000 and enter. Next, we're going to have the investment income. So we're going to say this is equal to the investment income. And we will be in cell L35, negative of that 2003. Now don't pick up this one over here because then you'll get a circle reference when you post to the middle cell. So you want to make sure you're picking up the one on the left to do these type of formulae. And then we are going to say the next one is going to be contractual adjustments. Now this one has a debit in it because it's kind of more like an expense type of account. Therefore, to make it go down, we do the opposite thing to it, which will be a credit. We're going to be in cell M36. Within M36, we're going to say negative of, and then scroll back down to that 645,000 and enter. We'll continue down with this. We're going to say the next one is going to be equal to the provision for bad debts. Once again, it's at 32,007. That's going to be a debit. We need to credit it to make it go down. So we're going to say in M37, negative of that 32,700 and enter. Next, we have the research expense. So we're going to pick up the research expense. We're going to be on the credit side. So we're going to say negative of, scrolling back down and picking up that 355 and enter. So I'm going to scroll down a little bit And the next one is going to be equal to the fiscal and administrative expenses. We want to be on the credit side. There's a debit, so we are going to credit it. So I'm going to say negative of, scrolling back down to that 201,840 and enter. And then we're going to say this is equal to the general service expenses. That's going to be on the credit side. So we're going to say negative of, and we're going to pick up that 254.2 and enter. And scrolling back down a little bit more, we're going to say in K41 equals, we're going to pick up the nursing service expense. That's going to be on the credit side. So we're going to say negative of, scrolling back down to that 701,170 and enter. Next, we have the other professional services expense. We're going to be on the credit side in M42, negative of that 187,500 and enter. And then finally, we have the depreciation equals the depreciation. We're going to be on the credit side, so I'm going to say negative of that 154 and enter. All right, let's record this out then. Now we've got the patient and service revenue. That's a debit. That's a credit over here. We're going to debit it. We're going to record that to the cell Q44. So within Q44, we're going to say equals and scroll back over to the patient and service revenue. Now I haven't quite completed this journal entry. There's going to be one more component. We'll do that at the end. Right now I'm just going to show that we're going to complete our objective, which is to make all of these accounts go down to zero. So we'll just go straight down the line here. The next one's going to be revenue other equals. We're going to scroll back up and pick up that revenue other account. The next one's going to be grants, revenues, and contributions equals. We'll scroll back up and pick up that grants and contributions account and enter. The next one's going to be investment income equals. We're going to scroll back over to the investment income. And then we have the contractual adjustments equals. This is a debit, so we have a credit over here in our journal entry to make it go down to zero. Then we have the provision for bad debts equals. Scrolling back up to that credit for the 32,007 and enter. And then we have the research expense equals. Scrolling back up to the research expense of the 355 and enter. Then we have the fiscal and administrative. So we're going to say equals. Scroll back up to the fiscal and administrative service, the 201,840 and enter. Then we have the general service expense equals. Scrolling back up to the 254,200. And then we have the nursing service expense equals. Scrolling back up to the 701,170. Two more, then we're going to say equals on the other professional. That's going to be the 187.5. And finally, depreciation equals the 154,000. Now that takes the objective of making all these zeros, which is the closing process. We're out of balance by that 462,910. That, of course, is what we are going to be recording, and it's equal to what the net income type of number would be. The change, the revenue minus expenses in essence. So we're going to record that here. That's going to be our last transaction or last part of our journal entry, which is going to be going to the net assets without donor restrictions. We're going to do that with a credit. So we're going to be on the credit side. We're going to use our plug formula. So we are in cell M44, negative SUM. And then we're going to select all these cells and enter. So there's going to be the transaction. There's our amount. It's actually the debits. We actually need a debit to make this work. So I'm going to pull this over to the debit side. I'm going to reformat this cell by going to on this cell, home tab, clipboard. This is the paintbrush for the format painter. I'm just going to paintbrush this one over here. All right, there it is. And we're going to post that to the Q43. Within Q43, I'm going to say equals and go over to that 462,910 and enter. So there it is. It actually brings this down. We had a loss. If we go back down, we see that we are back in balance here. This then is our post-closing trial balance. The post-closing trial balance having assets minus liabilities, which would then equal that equity, which is called here the net assets of $2,287,768. That also equals, if we were to add up all the blue accounts on this side, the $2,287,768. Okay, last thing we're going to do here is we're going to do a quick calculation of the calculation of the net patient service revenue. So the net patient service revenue is basically going to be the top of what would be kind of like the income statement or the statement of activities, would be the patient service revenue. That's going to be our primary income type of account. Then we're going to say less, let's say less the contractual provisions and the provisions for bad debt. So these are I'm going to flip the sign and say negative of the contractual adjustments, and then the provisions for bad debt. I'm going to say negative of the provisions for bad debts. So those are going to be you could think of them kind of like as contra revenue accounts in a way, because this is going to be getting to the net patient service revenue. So the net patient, this is not net income, obviously. The net patient service revenue, I'm going to use the trusty sum formula, which will subtract these because we put this in as a positive, these two as negatives. Therefore, we get to the $737,700. So that's going to be the calculation of the net patient service revenue.